What if I told you the internet almost died before it even began? This is the story of how the dot bubble wiped out $5 trillion, crushed thousands of startups, and accidentally paved the way for Amazon, Google, and everything you use today. Once upon a time, in the ancient mystical land of 1995, a terrifying noise echoed through living rooms across America. That sound, the internet logging on slowly, painfully, magically, and everyone agreed. This thing was going to change the world. Is the phone line broken, or is Jimmy summoning demons again? No, Mom, I'm downloading a picture of a cat in sunglasses. It'll only take 11 more minutes. The internet didn't make sense, but it didn't have to. It blinked, dotted, buzzed. It screamed at you like a haunted fax machine. Nobody really knew what it was, but everyone agreed it was the future. A future trademark. Mysterious, glitchy, glowing, absolutely full of potential. Early pioneers like AOL, Yahoo, and Netscape blazed the trail. The internet was like the Wild West, but with fewer cowboys and more nerds wearing socks with sandals. You had to wait 5 minutes just to load a picture of a dancing baby, but nobody cared. The mere act of being online made you feel like a tech prophet. Even if you had no idea what JavaScript was, you were convinced you were writing the next industrial revolution. Enter Wall Street. Upon hearing the words online bookstore, venture capitalists reacted like a dog hearing a chip open. Investors drunk on optimism and decaf lattes pour billions into anything ending in .com. What does the company do? It's called toiletseater.com. It uses AI to predict when public restrooms will be vacant. Brilliant. Give them $200 million. Suddenly, every startup was a ticket to financial Valhalla. All you needed was a terrible idea, a logo designed in Microsoft Paint, and a founder who could say the words Internet First Mover Advantage or Disruptive 3 times per pitch. Congratulations. You now had a $100 million valuation. Let's take Pets.com for an example. Famous for its sock puppet mascot and burning $300 million in investor money while selling 50-pound dog food bags at a loss. Investors responded by giving them more money. eToys burned through cash like a Bond villain hosting a barbecue. Webin promised to deliver groceries with the speed and accuracy of a military strike and then collapsed like an overcooked soup. But nobody blinked. The Nasdaq quadrupled. IPOs with the new celebrity weddings. The media couldn't get enough. Financial talk shows started sounding like tech gospel. Welcome back to Money Madness. Today's hot tip. A website that mails you socks for dogs. It's going to revolutionize pause parody. By 1999, the hype had reached final boss level. Super Bowl ads featured companies nobody had heard of. Some had no product. One ad simply said, "Our website launches in March. Please clap," and the crowd did. People weren't investing in businesses. They were investing in vibes. Stock prices soared. Everyone was rich on paper. Teenagers were day trading from their bedrooms. Your aunt with the crystal collection was buying tech stocks. Even your dentist probably had a side hustle coding JavaScript in between cleanings trying to get listed on the Nasdaq. Between 1998 and 2000, over 12,000 new .coms were born. Some had ping pong tables, massage chairs, nap pots, cereal bars, and scooters. If your office looked like a daycare for billionaires, you were the next Microsoft. No one asked about profits. Revenue was a myth. Burn rate, glorious. It wasn't about making money. It was about scaling. Scaling to what? No one knew. But that didn't stop them. And through all this, one sentence echoed in every boardroom and newsroom. This time it's different. Well, actually it wasn't. But no one wanted to hear that because this wasn't just a gold rush. It was a delusion wrapped in optimism. Everyone believed the internet would change everything. And it would, just not like this. And somewhere deep in a garage in California, a few quiet nerds named Bezos, Brin Page, and Musk watched it all burn bright, knowing the real internet hadn't arrived yet. The hype train was speeding straight toward a cliff, but they were already building the tracks for what came after. March 10, 2000. The Nasdaq hit an all-time high at 5,048. Champagne flowed. Office chairs rolled. Celebrations broke out like it was a new era. And in a way, it was. The internet felt unstoppable. This wasn't a bubble. This was the future unfolding in real time. And then almost imperceptibly things began to break. A few .coms started missing earnings targets. Questions once considered optional came roaring back into fashion. Wait, what's your revenue? How many customers do you have? Are you actually profitable? Webin, after spending over $1 billion building a hyper-optimized grocery delivery empire, reported devastating losses. Pets.com, once at